Rubius Therapeutics Inc., trading as Ruby, is an emerging growth company whose initial sale occurred on July 20th, 2018. They offer a new class of medicines called the red blood cell therapeutics, or RCTs. Their capital raised thus far is approximately $240 million, and they claim that their RCT therapy can treat rare diseases, cancer, and autoimmune diseases. However, this company has not even entered phase 1 of FDA approval for any of its treatments. As a result of this and other risk factors, the company has informed investors that investing in Rubius carries a high degree of risk. First and foremost, the company has incurred net losses every year in operation to date and expects to continue to do so in the future. They rightfully warn investors that a safety profile, regulatory approval, and commercial viability have yet to be established, and the company doesn't even have products approved for commercial sale. Net losses have consistently increased since 2016, from $11 million in 2016 to $43.8 million the next, and $15.3 million in just one quarter in 2018. Their future expenses are clear: clinical trials, additional discovery of product candidates, regulatory approval, creation of an infrastructure, which includes manufacturing, marketing, sales, and distribution, are among their clear risk factors. In bold, the company has informed its potential investors that they will need to acquire continued financing, but in this day and age, how many companies aren't in the same position? Stock opened at $23 per share, and unlike Facebook, with about $240 million raised in capital so far, combined with the $240 million it intended to raise at its IPO, Rubius Therapeutics has already allocated $513 million to purchase and renovate a manufacturing facility, advance its first product into stage 1 of clinical trials, and to expand its research platform. This capital will not be enough to fund any of its products through regulatory approval, and as such, the prospect of them needing additional capital is undeniable. The stock further does not intend to pay dividends to its investors, so no immediate cash flow is available. Since its opening at $23, stock price has dropped as low as $20.05, but is currently valued at about $22.19 per share. The stock is highly risky as it forms part of a group of new drugs which, as of yet, are wholly unproven. They further inform investors that animal testing is highly inaccurate as animals expel these products as foreign to their bodies quickly, which limits testing. Again, no RCTs have been approved, which makes the risk even higher for Rubius than for typical pharmaceutical companies as their entire platform is experimental. Regardless of these risk factors, the share price jumped 35% on its opening day, and the value of the company was an estimated $2 billion after its IPO, reportedly. According to the Boston Business Journal, the $241 million raised by Ruby is the highest of any pharmaceutical company based in the Bay Area. The same article went on to note that the company's ability to raise so much money in its preclinical stage was almost unheard of previously. Allegedly, technologies such as CRISPR, Intellia, and other gene editing companies helped change the market for preclinical pharmaceuticals.